Good evening. Welcome to Options Tender's Saturday evening, 10/22/22. Welcome everybody. Welcome traders. If you are new here, go down to that bottom right hand corner, hit that Options Tender logo and subscribe. All right. And don't forget to hit those notifications so we can get these updates to you every time we do them. So we're going to go through ES as usual on multiple time frames down to the 65. We did have a change in market sentiment in the very near term because of some chatter with the Fed slowing down and this and that. That's I don't go by too many fundamentals, but we had two plans laid out in the last video. If you want to go back and look at those two videos ago, we put out our Elliott wave count, and you'll see that the alternative count is the path that it seems that we're taking for the near term, which means that the bear market will continue to the downside, but we have some upside to go. Okay, so let's go through the monthly time frame. After we're in this channel here, after a 5-wave move up, we are retracing, come in closer. We have lower highs, lower lows, lower highs, lower lows. We continue that trend. We're still underneath that 8 EMA, which is our trend indicator. The thing is, we had a reaction. We talked about confluence here at the 50%. This has been here for months, and with the 50-month simple moving average as well. Our next stop below is the confluence here. We're looking at the 3200 area. This is not a definite channel bottom at really I just put it here because it had the touches from, let's see, let's go back out. Sorry. Okay, so we only have 2 points here, so this is not something that is real finite for me in this area. I just put it there because we had a tag here twice in this Corona crash, but the top one is a for sure thing, and we had several touches. But this bottom one, really we had this mid line that would be, if I drew that there, that has all the touches there. So that's not as important, but the 618 retracement is going to definitely be a point of interest for correction. Some people are going to count this from wave 4 into a wave 1, 2, and the bull market prevails. That's what, but without the Fed, changing everything, the economy, this and that, I just don't see that being the end game. Okay, we'll have an alternate count when we get to that point, but I do think that we get down to this 50% and this 618 ultimately down here around the 2700 and the 2200. So those are my lower targets after we see whatever kind of shenanigans happens at 3200. Okay, enough with the monthly. Let's go down to the weekly. Notice the MACD and the RSA are headed lower. So we do have a little bit of divergence in the RSI and MACD at this point. I don't think that's the end of it. I do think we head lower from here, but we continue to be traders. We're not predicting that we can't make all-time highs. It's not likely. Okay, so after this falling wedge, we're breaking down here. Again, lower highs, lower lows. We're at that beautiful support line, confluence with the 200-week simple moving average here. So great area. We're reversing off of it, but we're coming right into this 8 EMA. And then we have the 20 simple week moving average as well. So you have those two areas there. Really this 3900 area. I love this spot. We've had this support resistance here for a while, ever since back here when we started messing around with it and coming up and down. This is the 3900. It's a really good area for me. So I think if we get above this 8 EMA, with the kind of move that we have, I just think we come up to this 3,900 area. Otherwise, I think we're reversing right now from where we are. And I just don't see that in the count. So let's go ahead, and if we do start reversing from one of these points, then I think we're going to start getting into this ping pong area from 3,500 to 3,200 would be our targets where we make some moves and then we start heading lower. Okay. On the daily, trend is our friend. So again, this is our lower targets that I expect to get to. But before we start heading down to that area, this appears to be a 1, 2, 3, 4, 5 wave sequence that has completed. Okay, now that we're over this 8 EMA and the 20-day moving average, I do think we start to head higher, right into at least, at bare minimum, the 38.26 zone. We will, when we're playing these bounces like this, we will look from zone to zone to make sure that we don't get reversed on, and it just, the market could dump at any time. It could lose its bid. But I will tell you, with the retracements coming from the top of this 5-wave sequence to the bottom, it looks like that 50% retracement and the 618 are just a beautiful zone for a retracement or for a reversal. And I'm really liking that 3,900 even there. It matches up with the 50-day moving average, the 100-day moving average, the downtrend line, also that support resistance that was so important so many times. And I'll just kind of show you on the daily. You can see it a lot better how many times this is the 3,900 area. Came down to it. Here's some confluence there. Here, touches here, resistance, support. It even goes way back. How far am I taking you? To the 3,900 area. This zone right here. It was resistance here. Resistance. And then, boom, took off from there to continue upside. Okay, so super important area here. We may get some sort of resistance here at the 3,800, and we'll just have to be careful. Maybe take off, take some profits there, and then as we may start to get above it, get back in. Especially if you're a futures trader or day trader, that's going to be much easier said than done. But I will be swinging and taking some profits, or at least rolling out my weeklies as we get to this area, looking for the next area. And then I won't play any more longs at this area. If we start to break above here, you have something to put your back against, but I don't trust it, and we could just gap down the next day. But then we'll be looking for reversals all the way up to 4,000. You get above 4,000, and it's just getting unlikely that this is a larger 1-2 before we head down to the third wave. But now on the daily time frame, what kind of says, hey, we're going up there, we're starting to get a little bit of momentum, is the MACD. The positive divergence is starting to play out. We're starting to get a little bit of gap here in this this yellow leader line. You have the MACD, which is the blue, and the histogram shows the width between those two. The gap between those is starting to widen, so you're starting to see some green, some momentum increasing, and so that kind of gives us a little bit more confidence that we're playing this correctly to the upside. We're on the RSI, we're at this 50 point, but last time we had a daily divergence play out, we see price go up to this one, up to at least the 60, 65 area on the RSI. This one way up into, it's pretty rare, into the 70s. I don't suspect we'll see anything like that, but I do expect something like this area where we get up to the 60, 65 maybe. on the bear market, you shouldn't see too many spikes into the overbought area. But this divergence is playing out. We have some strength going through this 50 area. All right. So, and last but not least, let's go to the 65-minute. See if we can notice anything else happening. All right. And looking at this, we do have a possible inverse head and shoulder. I'll try to highlight this. It's probably not the right color that I'm looking for, but you'll get the point. You have the left shoulder, head, right shoulder. All right, let me tell you what all these things are. So first of all, that formation, this is the neckline. See if we can brighten this up for you. We're looking at this being the neckline. We have the left shoulder, head, right shoulder, and then the measured move from this is the bottom of the head to the, well, I guess you'd say the top of the head, to the neckline, and then 100% from that measured move is all the way to the 4,000 area. Now, like I said, I don't trust from that area that we'll get that, but I do like more the fact that this 100% mark goes to that 3,900 area. If we go from head to the right shoulder, it's not a proper measured move, but that would be 100% move from, if you consider this wave an ABC for an A down to a B, and then a 5-wave impulsive move up to the 3,900 area. So that would take us to about 3,919, which is about our target range anyway, right over there with the downtrend line and the expected move for the week. And also, if you notice, a lot of times I have these, this is the demand area painted in green for the buy area, and the red area is the supply, and that all coincides right there in the confluence. So that's why we're looking for that as being the target area. All right. I hope that helps. This is our box that we've been looking at. I have a lot of things going on in here, so I'm going to take that out I don't need that for myself. But again, head shoulder formation, if you're looking for patterns. If you're looking at levels, we have all sorts of, we have our Elliott wave count that we put on our Patreon. I showed you guys that the other day. This is the alt. And if you want to see those, it's $10 a month for any of the trade alerts and things like that we do. All right. So thanks for joining us here at Option Center. You guys have a wonderful rest of the weekend, and we will see you probably Monday. All right. Thank you. Don't forget to like the video.